How the personal income tax changes will affect you. The current tax table was introduced in the year 2011. Due to high inflation and lack of review, the structure has resulted in fiscal drag, where many low-income earners have been pushed to the top tax brackets over time. This means that an individual earning just 400,000 naira a month is paying the same top marginal income tax rate as a wealthy individual earning, say, 20 million naira per month. Therefore, the tax table has become regressive rather than progressive as it was originally designed. Also, the current personal income tax regime does not encourage formalization, given that the effective top tax rate on companies is nearly double that of enterprises, which also encourages arbitrage in some cases between the two income tax regimes. Hence, the proposed changes seek to address these issues and simplify the system by incorporating current reliefs and allowances into the bands and rates to achieve an overall lower effective tax rate for the majority of workers. This perception is not correct. Not at all. Individuals earning about 1.7 million naira or less per month will pay lower pay tax under the bills, while those earning the new minimum wage and slightly more will be fully exempted. These thresholds will result in over 90% of workers in the public and private sector paying lower taxes, while high-income earners will pay slightly more in a progressive manner, up to 25% for the ultra-high net worth individuals. No. Besides the 800,000 naira per annum, which is exempt from tax, there's a rent relief of up to 200,000 naira per annum, which together will exempt individuals earning up to 1 million naira per annum, which is about 83,000 naira per month. This is particularly beneficial to low-income earners. Also, the new tax bands and rates have been designed to avoid a situation where individuals earning slightly more than the exemption threshold are taxed to an extent that makes them worse off than a person whose income is within the exemption threshold. For example, a person earning 30,000 naira per month is exempt from tax, while a person earning 30,001 naira per month will pay about 500 naira, leaving the latter with a net of 29,500 naira, which is of course 500 naira worse than the person earning 30,000 naira. Under the tax bills, this problem has been addressed as everyone will be eligible to the first tax-free bracket. By comparison, the second band under the bills, which is to be taxed at 15%, is currently being taxed at a marginal rate of 21%, even after all reliefs and allowances. So while 15% may appear steep from 0% for the first band, it is lower compared to the current tax table. The real impact for a person earning about 3 million naira per annum, equivalent to the aggregate of the first and second brackets, is a lower effective tax rate of 10% compared to about 12% under the current tax table. No, one of the objectives of the tax reforms is simplification. The impact of the consolidated relief allowance and personal relief are being incorporated into the tax table, such that the overall goal of exempting low-income earners and reducing taxes for middle-income earners is achieved. By integrating the reliefs into the tax brackets and rates, many taxpayers with basic education will be able to calculate their taxes with little or no assistance, thereby achieving the dual objectives of lower tax burden and lower simplification. Statutory deductions, now referred to as eligible deductions, are still applicable under the new tax bills. These are contributions under the National Housing Fund, National Health Insurance Scheme, Pension Reform Act, interest on loans for developing an owner-occupied residential house, annuity or premium paid for life insurance, and of course, rent relief up to 200,000 naira per annum.